Rick Rule of Sprott Asset Management joins me now at the Metals and Minerals Conference here in New York. Rick, thanks so much for being with me.
Daniela, it's a pleasure.
So Rick, last time we spoke, you said let's see the positive in these dire times and see them as a buying opportunity. Have your thoughts changed since then?
Well, from the point of view of a check writer, what you would describe as misery is a pleasant thing. In order to get bargains, you have to participate in the market where other investors aren't competing against you. And that certainly defines the time that we're in. We have built the business that is now Sprott today over 30 years by investing aggressively in bear market bottoms. What you learn in the resource business is that you're a contrarian or you're a victim. Most people want to be contrarians when it's popular, which is a difficult thing to do. Markets like these are tailor-made for investors like us.
But what do you say to people, Rick, that say, this is not even the bottom yet, we can go lower?
Certainly the case, absolutely the case. What's interesting about this, however, is that at the point in time that we are, where prices are off 70%, by one definition, the market has lost 70% of its risk, hasn't it? The narrative that we were having in 2010, the narrative that we were having in 2006 in bull markets, is the same as the narrative today. Nothing has changed with regards to the global economy. Nothing has changed with regards to government insolvency or bank insolvency. What has changed is paradigm and price. So if the set of circumstances surrounding the market is the same, but the market is 70% cheaper, by definition it's a better market. It's people's perceptions that have changed, and it's people's perceptions that allow us the bargains that we're able to afford today.
But Rick, do you think we'll see a turnaround soon in the mining stocks?
Soon? No. My experience, and past does not have to be prologue, but my experience is that market bottoms are characterized by catastrophic, epic declines. Just like bull markets end with an upside blowout, bad markets end with absolute capitulation selling. It looked 3 weeks ago like we were going to have that, but that period of 2 or 3 days of terror that we had 3 weeks ago would need to extend for about 2 weeks. This type of thing that we saw in early 2000 or the type of thing that we saw in 1991, they seem to occur once every 10 years. You will know it when you experience it, and you will not like it, but it will be evident to you.
And what do you look for when you're selecting companies, Rick?
Value mostly expressed by people. What you learn in the exploration business is that it's really a knowledge business. It's not an asset-intensive business. So I look for people who have been serially successful. Most of the success that I've enjoyed in the business has really been renting success from friends of mine like Bob Quartermain or Robert Friedland or, that whole range of people, Lucas Lundin, Ross Beatty. You look for people who have been serially successful, and people who have been serially successful at an endeavor that's very, very, very closely related to the one that they're doing now. Not successful in some endeavor that's unrelated to what they're currently doing.
Rick, I was speaking to someone yesterday who said, I like Rick Rule because he puts his money where his mouth is.
Mm-hmm. Absolutely. At Sprott, we always eat our own cooking. It's the right thing to do, first of all. But secondly, over 30 years, it's tasted good. We have built Sprott by aggressively investing our own money in markets like this.
So Rick, let's look at the gold market now. Last time we spoke was at PDAC before gold had that huge correction. What are your thoughts on the gold market?
I'm a gold bug, first of all. If you consider gold, you need to consider it in the context of the anti-gold. The anti-gold is the U.S. dollar. The U.S. dollar, represented as an example by the U.S. 10-year Treasury, I think is a joke. If you look at the ability of the U.S. government to service their debt at current purchasing power levels, I think the probability of that is almost non-existent. And for that risk, they pay you 1.75%. Jim Grant called the U.S. 10-year Treasury return-free risk. Think about that phrase, Daniela. Is return-free risk attractive to you? So gold versus the anti-gold. Gold is off, but my holding costs are low, and the competitive instrument to me is a joke. Could gold go lower? Of course. If you give me the word could, I can give you any scenario you ask me to give you. The question is the probability. What is the probability over 10 years that the purchasing power of gold is the same or greater today as then? In Toronto, I think it was, you asked me, when is the gold price going to move? Reflective of a concern of your reader, and I gave you the wrong answer. What I should have said is, Daniela, gold is going to move in July 2000, because it did. It moved from $250 to $1,500, a six-fold move. And people who want more than a six-fold move over 12 years are smoking something. What gold has done is maintained its purchasing power, and it's what it's going to do for the next 10 years, too. If people who invest in gold have a 2-month time frame, The problem is them, not the metal.
Okay, well said, Rick. And I know you don't like giving trading ranges, but what price range are you looking at for gold?
I have no earthly idea. I'm not ducking the question, Daniela. The difference between your age and my age is when I was your age, there was a motel chain called Motel 6, and it was called that because motel rooms rented for $6. Those same motel rooms rent for $69. That's what gold is supposed to do. Gold is supposed to protect your purchasing power. People who buy it for other reasons make a mistake.
Well, on that note, thanks so much for your thoughts today, Rick.
Thank you for the opportunity.
And thanks for watching our coverage from the Metals and Minerals Conference here in New York. We'll have more for you later in the day. In the meantime, you can email us at newsfeedback@kitco.com or follow this conversation on Twitter at Daniela Cambone. Thanks for watching.